Elon Musk has made a strategic decision that could bring huge benefits to Tesla in the coming years. The impact could be around $40 to $50 per share, and that's just the beginning. This isn't only about potential tax credits. Leveling the playing field by removing certain advantages for traditional automakers, like those in Detroit, could give Tesla a major cost and scale advantage. Another key factor is the potential for fast-tracking full self-driving technology. If this happens, Tesla could unlock trillions in valuation purely based on AI. That's a game changer. The idea that Tesla could become a dominant force in autonomous driving is no longer just speculation. It's an increasingly realistic scenario. This isn't just about Tesla, though. Apple and other major tech companies could also benefit from this shift. Musk, in a way, has positioned himself as both a tech leader and a political figure with significant influence. While he's still primarily a CEO, his ability to navigate political landscapes could be crucial in ensuring favorable policies for Tesla and other tech companies. Right now, we're seeing companies like Nvidia and Apple reacting to these developments. While there are concerns about tariffs, there's also hope that Musk's presence in these discussions could prevent the worst-case scenarios for AI-focused companies. The question remains, could the impact of these policy shifts actually favor Tesla and other tech giants in the long run? Many investors seem to think so. One of the biggest concerns is the potential removal of EV tax credits. While this might seem like a negative for the overall EV sector, it could actually benefit Tesla due to its scale and ability to adapt. On the other hand, traditional automakers like GM and Ford could struggle significantly. Some companies have already started pulling back on their EV investments, which could put them in a difficult position. Beyond tax credits, the biggest factor here is the acceleration of Tesla's autonomous vehicle plans. The introduction of Tesla's robo-taxi service, potentially as early as 2025 instead of 2026, could be a complete paradigm shift. Faster regulatory approval for self-driving technology would fundamentally change Tesla's growth trajectory, making the company far more than just an automaker. Investors and analysts who have closely followed Tesla's progress understand that this isn't just about selling more cars. The bigger picture is AI and automation, which could drive Tesla's market value to $1 trillion or more. Regulatory hurdles have been one of the main challenges for Tesla, especially with agencies like the FTC keeping a close watch on the tech sector. However, a shift in government policies could ease those restrictions. Many investors believe that a more favorable regulatory environment would be bullish for big tech and open the door for more aggressive growth strategies. For Tesla specifically, this could mean that Musk takes on an even bigger role in shaping AI regulations. Some analysts believe he could become an unofficial AI ambassador, ensuring that Tesla and other tech companies aren't unfairly restricted. That's part of why Nvidia and other AI-related stocks have been performing well. The market is reacting to the possibility that AI-focused companies could see fewer regulatory roadblocks. Of course, there are still uncertainties. Policy battles will continue in the coming years, but the key issue remains Tesla's ability to scale its AI and self-driving initiatives. If full self-driving technology is approved sooner than expected, the potential revenue from Tesla's autonomous services could be massive. Many investors are already looking ahead to a potential $1 trillion or even $1.5 trillion market cap for Tesla. That's not just speculation. It's based on the real possibility that Tesla will dominate autonomous driving and AI-driven mobility services. If Tesla can maintain its advantage in full self-driving, its valuation could surge dramatically. Removing EV tax credits might seem like a setback, but Tesla's ability to operate at a larger scale gives it a unique edge. Other automakers would struggle, while Tesla could continue expanding its self-driving fleet and launching services like its robo-taxi network ahead of schedule. This is exactly the kind of news Tesla investors have been hoping for. Musk's influence in policy discussions could play a major role in shaping Tesla's future. If regulatory approval for self-driving technology comes faster than expected, it could pull forward Tesla's growth timeline by years. Looking at the broader market, Tesla's current valuation might not fully reflect its AI potential. Many investors still see it primarily as an automaker, but its AI and robotics divisions are increasingly becoming the core of its long-term value. The biggest concern for Tesla stock has been its gross margins, which have been under pressure due to price cuts and competition. However, recent financial results have shown that Tesla is managing these challenges well. A significant improvement in gross margins, by 200 to 300 basis points, suggests that the worst might be over. If margins stabilize around 20%, Tesla stock could see a major upward move. Long-term, the key drivers for Tesla's growth are AI, robotics, and autonomous technology. Investors have been waiting for confirmation that margins are improving, and now there's evidence to support that view. Strong delivery numbers from China further reinforce the idea that Tesla's growth potential remains intact. The biggest breakthrough would be a sub-$30,000 Tesla vehicle, which is expected by mid-2025. That could be the catalyst for double-digit growth, significantly increasing Tesla's market share. In the past, concerns about declining growth rates have pressured Tesla stock, but a lower-cost vehicle could change that narrative. Looking ahead, Tesla's success will depend on execution. The company has laid out an ambitious vision for AI and autonomous technology, but now it's about delivering results. The latest financial report suggests that Tesla is on track, with margins improving and production ramping up. The key question now is when Tesla will provide more details on its lower-cost vehicle and autonomous driving roadmap. By early next year, investors will want to see concrete plans for production and expansion. Tesla's ability to reduce costs with its next-generation platform will be a critical factor in determining how profitable the company can be in the long run. If Tesla can execute on its AI strategy and maintain strong margins, its stock could be significantly undervalued. Analysts who previously doubted Tesla's ability to scale its AI initiatives may start to rethink their position as the company continues to make progress. China remains a major factor in Tesla's growth story. The company's recent delivery numbers exceeded expectations, suggesting that demand is stabilizing despite concerns about competition. If Tesla can maintain strong market share in China, it will further reinforce its position as the leader in EVs and autonomous driving. Tesla's future isn't just about selling cars. It's about transforming mobility through AI and automation. The introduction of Tesla's robotaxi service could be a major turning point, creating a new revenue stream that significantly boosts profitability. The rollout of unsupervised full self-driving in states like California and Texas will be another critical milestone. If Tesla can successfully deploy this technology at scale, it will reshape the entire transportation industry. The long-term vision for Tesla includes millions of autonomous vehicles on the road, potentially generating billions in annual revenue. If the company can execute on this vision, its valuation could be far higher than what we see today. Tesla has a history of proving doubters wrong, and this could be another example of that. While there are still regulatory challenges to overcome, the trajectory for AI and autonomous driving is becoming clearer. Looking back a few years from now, this could be the moment that marked the beginning of Tesla's next major growth phase. The market is starting to recognize that Tesla isn't just a car company. It's an AI powerhouse that's leading the way in autonomous mobility.